Discipline sharp like a samurai blade. We don't chase trades, we let them get made. Mayo and blueberry lines of destiny. Price bounce clean, high probability. Manual grind or eye machinery. Fly gold trading with precision energy. Mayo and blueberry steady and true. The market whispers and we already knew. When ketchup meets mustard, the move comes through. Fly gold live, watch the candles bloom.
All right. I'm gonna run that back. AUD USD trading off the 1 hour mayo and blueberry. Gonna do it again. So the way that your blueberry bot, everything's gonna trade. This is gonna be just one of my good examples. Sell down to the blueberry. Your bot is gonna take that right away. This is my personal thing. Euro USD, you can definitely leave it on 30 right where it's at. AUD USD moves a little bit more. To me, 50 would be my option if I was using it. It's going to enter right off of it. And I'm going to count the 50 pips, which would be 500 on the bot. The reason why it's like that is because those are counting ticks. And pips in the pip world, it's 50. So that's why we got that 50 right there. So a 50 pip stop loss would have kept you safe because as soon as it hit it, it's taking the buy and it didn't go up right away. It came down here and made this wick. Then it pulled back up and then you could have came and had your 50 pips here. My personal suggestion is to always have the TP and the stop loss at least a 1-to-1 risk to reward ratio, which means they're the same size. Your stop loss should not be bigger than your TP. That should be break even, and that's beginner. As a manual trader, you can start to increase your TP and keep your stop loss the same to where it gets to a 1-to-2, at least a 1.5. So like if you're risking 50 pips, you're going for 75 pips. That's a 1.5. And if it's a 1-to-2, you're going for 100 pips, risking those 50 pips. So we had to did this thing until it got to 100. Ooh, it did not. It barely made that up here at the top of this wick. All depends on your entry. And the way I am, you would set alerts for this stuff. And you're not going to set alerts right at 100 pips. You're going to put it at 85, 90 pips. In case it don't hit it, you'll be able to watch your chart and go in there and adjust your trades. All of this is stuff that I use. We don't count. You don't want to miss a whole trade over 1 or 2 pips. So you go in there, you watch it, and then you find your exit. You can start looking at the patterns and say this is like it's reversing now, whatever it is you need to do. Candlestick patterns, ketchup crossing the mustard back the opposite way. Could have used the mayo as a TP, whatever you want to do, and say I'm gonna get out at that point. So our chart, if I notice this big W, because it's best when there is a W. Yeah, you can trade first legs, but this is after a reversal. It was selling, so we need to see a W be made to get more confirmation for buys. So based off that hour chart with the 1 hour blueberry and it hit it, once I notice that, I'm going down to this 15-minute to catch my crosses on the 15-minute chart. So that's what it looks like on the 15-minute. We know that that was the 1 hour blueberry up in here, came down and wicked it a little bit. This candle's a little bit smaller, but that was our railroad. That was our first sign. Gave our vector candles and pushed it straight up out of there. Ketchup across the mustard. This is still the first leg of the W. We got our nadir in the middle. And what that basically means is our M in the middle of a W form. So we got our M, and then we got our W here. Ketchup across the mustard right there on the second leg of the W is bouncing off the 1 hour blueberry down here perfectly at this point. That's my entry right up in here. And take your trades. Get used to learning to look for 3 levels to play out. You should see 3 levels play out on the 15-minute chart. That's basically your push, pullback, a push that breaks that first push, and then consolidation or whatever. And then the third one is when it breaks the next level. So every time it breaks and makes a higher high, that's another level for your buy. Once it does that, it's liable to reverse. It'll get choppy. It'll start doing all this kind of stuff. It don't have to be a big breakout. Technically, this was like the end of the third level. We got one here, pull back, one here. It got all choppy, consolidated, came and retested the water. If I was to zoom in on that, bounced off the water, catch across the mustard again, and came up and did the third level to finish the day. You got on your session breaks on TradingView, which is called period separators on MetaTrader. That's showing the beginning of the day and the end of the day. So we're looking for that 3 level to be done with for the day, and we're done. That's pretty much it. And you would just repeat that, looking for all the other examples. So I'm gonna go over a few more. This is another, I like this one right here. Our chart. This is February 13th. We got off the Mayo. It would have took this buy right away. That's a good, that never would have took you out that trade. It barely came down. That's not 30 pips. I mean, we can count it just to count it. But that definitely would have kept you in that trade. The 30 pips would have took you to right here. Everybody, I'm gonna redrop this as its own individual video. It's gonna be quick and short because this is for everybody that has the bot and needs to understand what it's actually doing. You understand the strategy because it's still the ketchup and mustard strategy. It's just using the mayo and the blueberry. 30 pips is what your bot is set at. So this is how you would come in here and count this on TradingView. Because these are Forex pairs, that 30 is the 30 pips. With gold, that would have only been 3 pips. So we're looking at Forex pairs, it counts exactly how it's supposed to count. 30 pips, I want to show the 50 pips just to show it. Because you'll remember I said that. If you start trading stuff like GBP pairs, you would definitely need to put that on 50 pips. All right, so we counted the 30 pips for the stop loss, and then we're going to count the 30 pips for the TP, which is up right there. So off of this right here, it would have got out like pretty much right away. It would have took profit. It don't look like it exactly hit it on its first push up. When it came down to retest it and then pushed up, that's where it would have took it. Now, as a manual trader, February 13th off the 1 hour Mayo, we got the ketchup crossing the mustard on the hour right here. It crossed there, and that line right there is where it would have got in at the open of the candle. If we go to February 13th on the 15-minute chart and look for this same setup, knowing that it just moved my line. Now I got to reset that because I'm also trying to show the differences in the entries. Yeah, right here. It'd have been right there. That confirmed the candle close. And if you got that ketchup crossing the mustard alert off, it's not going to do it to the candle close. You can do it while it's crossing, but that's not going to be safe. You need that candle to close, so make sure you put bar close on TradingView, so that you don't get false signals. So I'm going to find February 13th. Yeah. Okay, so that would be the blueberry. The 1 hour Mayo is the 15-minute blueberry. Bam. We got a cross there. We're using the hour though, so we're waiting until we see the W on the hour. So we got that, and then it's gonna bounce and then actually do the W. Catch across the mustard, your entry would have been right up in there. And in this case, it's always gonna be a little bit sooner than an hour. Sometimes it could be a lot sooner. That first example was like like 50 pip difference. So yeah, still using the hour setup, but then looking for the 15-minute catch up and mustard crossed, and then that candle closed there. So this candle open here, that would have been your entry. TP could have been the Mayo there. We'll count the pips on that entry up to the mayo right there. That's like 20 pips. And didn't do the 30 pips until the next day. All the way up in there. Definitely would have hit it by there. Yeah. If that didn't weaken enough. And that's what that would look like. I don't want to overcook that, but that's definitely what that would look like. This is why I am a manual trader, because it's stuff like this. I'm not going to take every single one. If I sit here and I see that it hit the mayo like here and then take that buy, you can take them little buys up to the mustard if you want. If you're that type of trader, cool. If you're a day trader, scalper, um, cool. I don't know if all of y'all have ever took that personality test. That's what I do with people personally, but that'll let you know where you're at. Stuff like this. Let me see. I'm gonna double check this. February 5th, we're gonna look to see if the ketchup crossed the mustard going up, which I'm sure it did on the 15-minute chart. Um, Now this one would have been good to go. Came in hit that mayo right there. Second leg double, even on the hour chart right there, you would have been in money with all that by the next day. Your 15-minute would have probably been crossing like down here somewhere, and you would have caught money with all that. But I'm gonna look at this because I like to look at the egg. See what's the worst that can happen. The thing about me is I show you how you lose. Show you how to lose, you learn how to win. Why are we losing? Let me show you exactly why you lost. So here, 15-minute blueberries or 1 hour mayo. Off the blueberry, ketchup, cross the mustard up in there, your TP still would have been water, and it would have been a sign by the end of the day once it didn't hit that mayo. It never broke the water, and the water kept giving off the cells. I don't know why my scanner ain't showing this. Probably because I don't know if we back too far, but it definitely should be showing all them cells right there. Yeah, because the water on top, and every time that crossed down, it's a cell. Yeah, I went back too far. It don't go back forever with the scanner, but that definitely would have been giving off those cells. Check the questions. Swinging. Oh, you good then? Yeah, I like to hold mine's 2 to 3 days. That's why I look for those big W's like that. Like this right here. So as a manual trader, yeah, you got a W there, but then you got your nadir M in the middle, and then this is one big W here, and it's pretty much still holding the mayo. It didn't just completely tank and came back up to it. Another thing you could do is wait till it closed back above the mayo and then take your trade. Ketchup was across the mustard here, it crossed back on top here, and if you're not still not sure, you wait till it closed above the water, and everything above that is good to go. It's just gonna bounce off the mustard after that. Because once it's the true second leg of the W, it's gonna go. And since you're a swing like I do, you're gonna go for those 3 levels. And on the hour chart, that level, the levels turn into days. Instead of 3 levels on the 15-minute chart in a day, you can go from the 1 hour to the 4 hour chart, and each day is a level. So what that looks like is this is one. Level one, you pull back, you level two, you pull back, and then you level three. And then it got choppy again for the level three and reversed. That's gonna happen every single time. You can't beat it. The reverse don't mean it's gonna completely sell, come back down here. What you're gonna look for after level three is always gonna be either a reset, so to buy all over again. It got choppy as ever, and then it ended up selling. Now it's back buying, or it's gonna just be a complete reverse. But then this ends up turning into the levels, level one, level two, and kept going, breaking new levels here and then there. And then that was the reverse. This would have looked like a straight up 3 levels on the 4-hour chart. It'd be less choppy. I think I'm going to keep that.